George Will, if you're a Republican, read Tom Friedman. Talk about what you want as an outcome. It's very often we're arguing before we are talking about the outcomes. We want the same outcome, and we're arguing about the path there. So I think there are ways that people can get together. I think business has to be part of it. I think government doesn't have all the solutions of its own, and so there are ways. But we need political leadership that gets that done.
So I want to switch over and ask you about the markets a little bit. During the Trump administration, we've had tax reform, repatriation, we've had deregulation, and that's helped the markets trend a lot higher. So what would be the catalyst to take the market higher from here, or are we going to be entering a period where there's no catalyst and maybe stagnation in terms of the capital markets?
So I think tax reform and regulatory reform are good for the economy and therefore the markets, and trade kind of goes the other way. Depending on how that gets worked out, trade can go the other way. I think if you wanted to get things right, getting infrastructure right, getting education right, those things would be great for the long-term growth of America. The markets and when the next recession is going to happen, that's a little harder to predict or a little harder to manage. But why, when you do all the things that are right for the long term? Like why? We've gone from having the #1 infrastructure in the world to we're not even the top 20 of developed nations anymore. And so, to me, let's move on. Let's fix this stuff. And a lot of that is political fixes, local agreements, some budgeting, fiscal. Infrastructure is complex, but it's doable. Does the American public realize that our air traffic control system is an ancient system? That we actually believe if you put a modern system in, that plane flights would be 20 minutes less and CO2 will go down by 20%. Why can't we get that done? It's staggering. We just can't get something like that done. And most of the rest of the world already has it.
No, it's shocking when you go overseas, right?
Yeah.
So I want to ask you a little bit about the economy with regard to rates. And you say interest rates, the possibility of wages and interest rates rising faster than anticipated is a real possibility.
Yeah.
So what are the chances of that, and what would be the implications?
Yeah. So you got to look at two things first. It's not just rates rising; it's the why. So if the economy is getting stronger, and I actually think it is getting stronger, and rates are going up, 25, 50, 75 basis points, rates are not as important as a strong economy. One is more important than the other, so that's fine. What I pointed out is that if inflation is worse so I think there's a chance, and again, this is probabilities, I'm not guessing, but I think the odds of inflation and wages going higher than people expect as we get near the tail end of the slack in the system, that then they're going to have to raise faster than you think. And that's when markets get very upset, when expectations get changed and people worried about it and then start to worry about inflation. If the Fed really starts to worry about it and they raise rates faster than people think, well, that is what has often caused a recession. And obviously no one wants that, but that is the makings of it.
But a higher rate environment is a positive for J.P. Morgan. Are you starting to see the benefits of that?
A stronger economy is, and all things being equal, rates are. If you have inflation and rates go up because of that and you go into a recession, that's no way good for J.P. Morgan.
So what about Jay Powell? What's your take on him? How's he doing? Early days still, but what's your feeling?
He's doing great. He's an adult. He knows what he's doing. He's been in the business economy. He's been at the Fed for a long time, and it's a tough job, but I think he's doing great so far.
And the mandate that he sort of laid out in terms of the number of increases this year makes sense to you? It's logical, reasoned?
I always point out to people the Fed doesn't always determine they don't determine what's going to happen in the future. Sometimes they have to react to it. So it's a little bit of a mistake to act like they're going to set all that. So, Janet Yellen survived, did a good job, but it was during very calm times. You could argue she made it calm, or
she might argue with that.
Well, but I'm not. When you look at economic history, it's not clear they caused that to happen. There's so many factors that affect the global economy. Jay may actually have to operate in more turmoil at one point, which has been more normal for some of the Fed governors. And so we'll see. But I think they have, they are adults. They're smart. They know what's going on. They're always analyzing what's going on around the world. And so, obviously, we all should hope they do a great job.
Regulation. Is the banking system, I know you get asked this a lot, Jamie, but is the banking system really safer now?
I think first of all, in regulation in general, think of bureaucracy. One of the things I put in my letter is even George McGovern, the most liberal Democrat who ever ran a small inn up in Connecticut somewhere, and he goes in his op-ed in the Wall Street Journal about how hard it was to follow his rules and regulations and run his inn. And by the way, he says, not everyone who fell down outside my inn was my fault. And the litigation system is causing huge problems for small business. Now, he had to leave Congress to learn this lesson, but he advised all legislators to spend a little time in the real world before he passed legislation. So small business formation is lower than it's ever been in America. So our entrepreneurial country, it's been coming down like this, and the main culprits are probably regulation, the cost of regulation, the difficulty of opening a business, and lack of access for new businesses to get credit. So existing businesses have pretty good access to it. So I think it's a big deal that we should tell the American public we need smart regulation. No one I know is saying get rid of regulation all bad. You want clean water, you want clean air, you want safe banks, you want safe highways. Talking about banks alone, yeah, the capital in the system is so high, okay, that it's staggering. And we should acknowledge that. And that capital is idle capital if it's not used. So, of course, you want strong banks, but you also want tons of idle capital, idle liquidity forever. So I think, to me, the Treasury put out a report going through all the things in banks. I won't bore your public with it. It's mostly calibration. No one's expecting to throw out Dodd-Frank or anything like that. It's mostly about what should and these are really complex rules about collateral and derivatives and liquidity and global transfers and if they do it right, you'll have more mortgage availability, more credit availability. It'll be good for America. You'll have stronger economy, stronger growth, and that's what you want. And it won't add any risk at all, because these are not things about risk. These are things about actually doing the job of a bank.
So net, right amount of regulation for banks?
No, they should reduce some of it and coordinate it across the board.
Capital requirements a little bit?
A little bit, but it's again, it's all about calibration.
Right.
How, when you say capital, how you calculate capital. The American public doesn't know this, but and American banks are in great shape, partially because banks and regulators acted faster and earlier than the rest of the world. But if they overshot it, and it's far more conservative now than European banks, I have to compete with those guys too one day. So I'm a little concerned. It's one thing today, but over 10 or 20 years, you got to be a little careful about putting the hamstring in American banks.
You mentioned tax policy. I want to drill down a little bit there. You wrote in your letter, "I'm pleased we did the right thing, not the easy thing. Congress took a historic step in 2017 to reform America's broken and outdated tax code." So my question is, was there any cost to this giant tax cut? I mean, in other words, it was just free money?
No. So remember, first of all, I'm commenting about the business part, not the individual.
Right.
Because we'll argue the individual side. And the American public, just so you get clear, everyone had a 40% tax rate around the world. The rest of the world's pretty much come down to 20 to 22. There's over 20 years, and we stayed up here. The result of that, brains, capital, and companies have been overseas for 20 years. That's had an insidious effect on the U.S. economy, capital, R&D, and it's made it much less attractive to build a plant here than build a plant overseas. So we needed to have a competitive tax system. And I don't buy this argument, well, we didn't need it now. We should have a competitive tax system in good times and bad times. So we did that. So the whole tax reform bill, probably over 10 years, will add that $1 trillion to the deficit. That in and of itself is not a material number.
Yeah.
The deficit today, net debt is $15 trillion. GDP is 20. If you added $1 trillion today, it's 16. GDP is 20. That's not going to change anything. I put in my letter, the real issue in America is that rate continues to go up, the debt, but in about 20 years from now, it's going to be 150%. And it's all about entitlement systems. So, to me, have a competitive tax system that attack the real problem, which is medical. And not just for the government, that's true for America. We spend 17% of GDP in medical. I can tell people we have some of the best and some of the worst. But let's fix it a little bit.
I want to talk about medical in a second, but wait a minute. So the tax cut costs $1 trillion, but the benefits outweigh that.
The benefits outweigh it, and I think it'll cause some growth. It'll more than make up for all of that. That's my own opinion. But I guess when you run a company, you have table stakes. Do a great job for your client. I think a competitive business tax system is table stakes for the American economy. I think to somehow think you have an uncompetitive tax system and it'll be good in the long run when you have this huge global competition taking place, it's just a mistake. It's not the way to run something. And to me, that should be done. And then if you have to tax someone like me a little bit more, I'm fine with that. But don't mess up the economy. The economy is what drives jobs, wages, R&D, innovation. It's why we have the best military on the planet. It's the economy, stupid. And let's learn how to nurture that economy, and then we can afford more, by the way. We can afford to take care of more people, put more in schools, put more in infrastructure. So don't mess up the economy in the name of something good.
All right, let's talk about healthcare. And here's a situation or an issue that you guys are really doing something. I mean, you've gotten together with Amazon and Berkshire Hathaway. Can you give us an update on that? And also, can you talk about the genesis? Was this like you and Warren and Jeff just getting on the phone and saying, hey, let's do this?
Yeah. So again, 17% of GDP is healthcare. Warren calls it the tapeworm of American society, and it's the thing that can bankrupt the government, and it's the thing that hurts our competitiveness. So in America, we have the best in the worst, some of the best doctors, pharmaceuticals, best outcomes. A lot of people from around the world, they come here and they have certain diseases. On the other hand, our outcomes are bad in a lot of cases. We don't have wellness programs, 40 million people uninsured, and the cost is too high. So the effort, we all know it's got to be fixed. A lot of companies are doing great stuff. So it was Todd Combs who was on my board. He and I were always talking about some of these issues, and we kept
works for Berkshire Hathaway.
He's Warren's, one of Warren's right-hand guys.
Right.
And he's an expert in some of these. We're going back and forth about what's not working, and we just started thinking, let's take a crack at it. Remember, we already do this. We buy insurance, and we self-insure it for all of our employees. We do wellness programs, chronic care, education, nutrition, gyms, all these things trying to get our employees healthier, but we know we can do better. If you look at the problems, overutilization and underutilization, end of life, which is 20% of the cost, and probably, in my opinion, half of that's wasted. People don't want what they gain end of life. Chronic disease is a big part of it. A lot of chronic disease is lifestyle, obesity, and smoking, which drives cancer, stroke, heart disease, and depression. So a lot of things can do. So we're going to hire, we haven't done anything yet. We're going to hire some great people, CEO, big data, medical law, medical scientists, and and we're going to start small. We're not going to go for a home run. About what can we do to improve each piece of what I just said. And then, over time, hopefully it'll be great for us. And we'll share. This is a not-for-profit thing. We're not trying to do anything. And anyone who can help us, we're willing to work with. We want to do a better job here. Maybe we'll find some ways to do it.
And it could be a template for the rest of the country.
Yeah, we see no downside. Warren's quite excited about it. Jeff is quite excited about it. We see upside, and the big upside would be somehow we learn some great lessons, and we can help inform the country how to have proper policy. We have to do something about healthcare.
Speaking of Warren Buffett, Jamie, he told me that he blew it by not buying J.P. Morgan stock.
Right.
He acknowledged that.
He owns it personally.
Right, and he also mentioned that he owns it personally, which I don't really understand. But anyway, so do you ever ask him why he didn't buy it? I mean, he bought Goldman Sachs, he bought Wells. That hasn't probably worked out so well recently.
Yeah. Warren, first of all, Warren's one of the great investors of all time. And he's very clear when he looks at things about what he invests in. And he's been a kind of a mentor. I've been reading his letters since I went back and got the partnership letters from 1956. And getting smart all the time, trying to learn what it takes on. So he tries to do things which are more predictable. And it would be hard to look at J.P. Morgan Chase. I think today it's far more predictable. Like 10 years ago, and say that was predictable. These were more volatile businesses, and we weren't necessarily performing all the areas and stuff like that. So he tends to stay away from that. He doesn't really like turnarounds, which I would say Bank One and early on J.P. Morgan kind of were. And I don't blame him. He's not looking to guess. So.
But the bank has been a serial outperformer. And, it is hard. I mean, it's a volatile business. I mean, just look at Wells again. So what is it that's going on here that creates that outperformance?
Yeah, so we don't worry about volatility, believe it or not. And it's the economy I kind of consider a friend. And remember, all businesses are episodic, some more than others, and there's no magic to 12 months. So when people look at like fixed income trading, well, it's not magical. But the fixed income markets in the world are going to double in the next 12 years. And double again, 20 years after that. And people need to buy and sell securities, and we're very good at it. So our view has always been invest relentlessly in your businesses, training people, technology, to give you more, better, faster, quicker, so that people like us and they vote with their feet. So when we gain shares, because we're doing a good job. And since we don't really that much about the episodic stuff, the ups and downs, don't worry that much about earnings on a quarterly basis, we can take this view that we're building for the future. We underperform in some areas. I mean, if you sat down, this room is where we meet as a management team for a full day. We go through everything, and believe it or not, we spend much more time in the negatives than the positives. Like, what can we do better? Where did we not do well? What are our competitors? They kick their butt in this country, this product, this service, and so we're always trying to learn and adjust. So hopefully we'll continue to perform for our shareholders.
Yeah, I mean, it's looking out over the horizon. It's tough, and you mentioned technology. I think you're spending $10.8 billion on technology. The business is changing so much. There's, blockchain, real-time payments. There's so many things that you guys are trying to do and get traction in. Yep. Can you talk about real-time payments, for instance, and how that's evolving for you guys?
Remember, banks have been huge users of technology my whole life. And technology is always evolving, but you have to use technology to do a better job for your client. So like even now, you can buy and sell stocks and screens. It costs a penny. You move money around the world. safe, secure. So you have to do that. So the difference now is it's much faster. It's much more agile. You can do, it's much more modularized. So you can take out a little piece of what used to be a huge system that would give you your statement. You can take out a little piece and improve that one little piece. Like, give you a piece of data or give you the ability to do something on the phone you couldn't do before. And real-time payments was a big deal. So the banking system did a terrible job in updating its own system. So we now have Zelle, which is the banks got together. It's open. It'll be open to all the banks, real-time, secure. So I can send you money in Zelle, and you'll get it, within 10 seconds or a minute later. We're gonna give you split the bill and all these other things that people want. And it's out there. It's growing quite fast, and we're just starting. Not all the banks hooked up. We haven't really started advertising. We want to make it ubiquitous, and hopefully we'll do that. And then we also have a real-time payment system, again, built by banks and the TCH for wholesale payments. So that now, of course, in wholesale payments, some of you don't want real-time. You want to put them through security checks and all that. But the fact is, we need to do those things to deliver more for our clients. And so those have been built. They're being rolled out as we speak.
But it's so competitive, and it seems to me that the margins just become really compressed. Can you make money going forward in these businesses?
So I made a chart this years ago about margins. When people complain about margins, I say that's been going on my whole life. Margins have been compressing in air. That's called capitalism. And when you deploy capital and research, so the cost of everything we do is about 1/10 of what it was 20 years ago. Stocks, 25 cents, 2 cents. Swap spreads, muni spreads, bond spreads, the ability to do things. And in the same time, you're giving people straight through processing, better fraud checks, so constant improvement. That's a given. So I tell people, you should look at business that you're going to have decreasing margins. That does not mean you have decreasing returns on capital, which is far more important. And yeah, we're going to invest. And we're going to give people certain things for free. We have some great products coming out. And so I want you to, I hope you have a Chase account, but you're going to get some great stuff this year, including trading, robo-investing, advisory investing, and with very competitive pricing type thing. And we haven't done it all yet, but we're going to do it so that you love doing business with us. And we make it easy to move money, easy to send it to your kids, easy to buy and sell, and easy to do research. We give you some of our research and make your life easier. Where you say, that's a great company, you should put your accounts there.
I have to ask you about President Trump. I know you talk to him sometimes. How often do you talk to him? What do you guys talk about? How's he doing?
Yeah. So, I didn't really know him that much before, but I am the chairman of the Business Roundtable. So we periodically, and I deal with other CEOs all the time, go talk to them about issues that are important to the business community, like trade, immigration, tax, et cetera, but not that much. So I think the last time I spoke to him was a month ago, and it was about trade, and obviously we weren't very effective.
You weren't exactly eye to eye.
No, but we were very honest, and he likes honesty, and we told him what we thought, and it wasn't what he, thought at the time. So, but I think it's important that he listens and that we impart what we think.
And how's he doing? What's your assessment?
I'm not going to assess a president after a year. When I write my letter, I go through policy by policy by policy. I think tax reform is good. I think regulatory reform is good. I hope he can get some real immigration, the whole deal done, not just the wall. And on trade, we have a different opinion. I think we want the same outcome. So again, when you argue about means and the outcome we want, and he has a different way about going about it.
Last question, Jamie. What keeps you up at night, and what's the biggest opportunity for J.P. Morgan Chase?
I think, I can't give you the biggest opportunity because I make a list of all of them. They're large. We're going to open 400 branches over the next couple of years in multiple cities. We have online investing coming. We've got real-time payments coming. We got unbelievable stuff coming, and global, what we're doing in custody and cash management is unbelievable. So I'm excited about all of it. Most of it's organic, which I think is hard but good. And what keeps me up at night, I think, and this is not about, we are very good at cyber, but I think cyber it's literally so bad, and the government knows, but we need to get better faster. This is an arms race, and we better do better at it. So I'd put that there. And I'm not worried that much about volatile markets. I always talk about why people are so surprised, and it's happened all our lives. And and the why is maybe more important than what. So, but I put cyber there. And the other one is policy. I think you've seen around the world policies which could be bad for growth and bad for people. And often policy done in the name of good that has the absolute opposite effect. So we need to have good policy, collaborate, work with people, get solutions to all the problems we spoke about this morning.
All right, sounds like the opportunity list might be longer than the what keeps you up at night list then.
Yes.
All right, let's leave it at that. Jamie Dimon, CEO of JP Morgan Chase, thanks very much for your time.
Andy, thank you.
All right, back to Shauna Smith.
Thank you so much, Andy. A very interesting interview Miles and Jared Andy just had with Jamie Dimon, the CEO of JP Morgan. He struck a very positive tone throughout the entire interview, talked about immigration, the U.S.'s trade deals, tax reform. Miles, what would you say was the number one thing that stood out to you?
Yeah, well, I think he was pretty firm in terms of his views on immigration and trade, especially in that, he knows what the president is doing. He's, generally okay with it, I suppose, because I think Jamie has consistently been very deferential to the president. He is, as he mentioned, the CEO of the Business Roundtable, and so he respects his view. But I think he's very firm that I don't agree with how he's gone about the initial steps of renegotiating trade agreements, and he would like to see a different solution on immigration than what seems politically feasible at this point.
And Jared, going off that, he was also talking about right there at the end when Andy asked him what kept him up at night. He was actually pretty positive about the markets, and he said that he wasn't worried about the recent volatility that we have seen in the markets. What's your reaction to that?
That was the one thing I was going to hit on if you didn't say it yourself. He's talking about business volatility, but also market volatility. If anything, don't let the day-to-day fluctuations keep you up at night.
Yeah, exactly. And so that's pretty positive here for Wall Street. And Miles, going off of what we were saying before we tossed it over to the interview, it's Wall Street has two things that they're dealing with. They have the hard data here, the economic data, and then also the headline risk that's been generated by President Trump.
Yeah, and I think, it's interesting. He mentioned Warren Buffett by name, and he talked about that healthcare venture a little bit. But I am interested to see how this letter evolves, because it is one of the more notable CEO letters that's published each year. And, not to put too fine of a point on it, I don't know how many more Warren Buffett letters we're going to have, but I would imagine that we'll have quite a few more Jamie Dimon letters. So I'll be interested to see how much of a leadership role he takes in kind of being the big voice of American CEOs.
Exactly, and whether his positive tone stays over the next several years. Well, that wraps it up for Market Movers this morning. I am Shauna Smith. Thank you so much for watching. We'll see you tomorrow.
After a 2017 in which almost nothing seemed to affect the stock market, it's a bit disorienting what's going on right now, which is that every little worry investors have expresses itself with more volatile trading action. Take Wednesday as an example. In the morning, Dow futures were off more than 500 points after China announced tariffs on another